Hey, hello friends. Welcome back to this last part of PDR strategy. In part 1 and 2, we have learned what is the core concept of this PDR strategy and how do we identify stocks that we need to trade in respectively, right? What we are going to discuss in this part is about risk and money management. Even before getting into that, I want to explain you two other important concepts. One is process of capital allocation, as in how do we allocate our capital to all the stocks, or for that matter, how do we reallocate next month based on profits and losses that we have got in this month. So that's the first concept. And the second concept is about portfolio rebalancing. What is the exact process of churning our portfolio? When and how do we exit our current positions? And at the same time, how and when we enter into new positions? We will discuss about these two concepts and then jump into risk and money management. Just a quick check before we move forward. If you haven't subscribed to this channel, please hit on subscribe button and click on bell icon so that you receive all interesting strategies that I develop in future straight into your mobile through notifications. Okay, how we do this reallocation? What is the process to reallocate? I'll start with an example and then walk you through some of the tools that I use for my calculation purposes. Let's say you have 5 lakhs capital and you invest this in 10 stocks. So for each stock, you invest 50,000, right? So for 10 stocks, it becomes 5 lakhs. Now let's say you got 20% profit in that particular month. So your 5 lakhs becomes 6 lakhs. Now next month when you are reallocating your capital, you need to ensure that you don't change this number frequently. When you decided the number of stocks that you want to invest in, that should stay same for the entire year, or I would say for the entire 5 to 10 years time horizon. Now divide this 6 lakhs again by 10 stocks, and whatever is the output, make sure that you invest this amount in each stock. At the same time, let's say instead of 20% profit, you got 20% loss. So your 5 lakhs would become 4 lakhs. Even this 4 lakhs, divide this by 10 and ensure that you just invest 40,000 in each stock. You do not increase or decrease the number of stocks that you invest in. Okay. But there is an important exception to this. Let's say that month you did not get 10 stocks from these screeners or the list of stocks that I put in my website. If markets are bearish, generally we might not get all 10 stocks. We might only get 3 stocks, 4 stocks, or sometimes we don't even get any stock to trade in, and that's for a good reason. If markets are continuously bearish, then instead of investing in stocks and getting losses, it's better to sit with cash, right? So sometimes you don't get any stock, and sometimes you might get only 4 or 5 stocks. In that case, let's say, again, let's take the same example. You got 20% profit and your capital of 5 lakhs became 6 lakhs. And if you divide by 10, you know that you need to invest 60,000 in each stock. And as I said, this month we have only 5 stocks to trade in. So what you have to do is invest 60,000 in each stock. So that becomes 60,000 into 5, which is 3 lakhs, and keep 3 lakhs aside. The reason why I'm stressing on this point is the amount that you invest in each stock is dependent on the total number of stocks that you decided to invest for that entire 1 year, 5 years, or 10 years, but not the number of stocks that you have to trade in that particular month. I see many traders do mistake here. Many traders, what they do is if they get 5 stocks to trade in that particular month, they divide this entire 6 lakhs into that 5 stocks. No, you should never ever do that. The amount of capital that we invest in each stock should always be 1 by 10th or 10% of our capital. That is very important to understand. And let's say this month you invested only 3 lakhs, and fortunately you again got 20% profit for this 3 lakhs. So this 3 lakhs becomes 3.6 lakhs, right? And you have already put 3 lakhs aside since you did not have stocks to trade in. So this 3 lakhs plus 3.6 lakhs becomes 6.6 lakhs for you to trade next month. This is how you need to invest in this strategy. Before entering into trades in any month, first you need to identify what is the capital that is available to trade and divide that by number of stocks that you decided to trade in for the entire 5 year or 10-year period. Remember, this number of stocks is not the number of stocks that you get in that particular month, but the number of stocks that you decided to trade for the entire investment time frame. Generally, I put this as 10. I don't change this number. So if my capital is 10,000 or 1 lakh or 10 lakhs, my denominator doesn't change. Only my numerator keeps changing based on profits and losses that I got in my previous month. Okay, now we know the process of allocation, right? How do we allocate our capital to stocks every month? And what we are going to learn now is the process of exiting our existing holdings and entering into new stocks on the next day. The process of exiting is very easy in this case. All you have to do is on the last trading day around 320 or 325, you have to exit all your holdings and sit with cash for the next day to invest. This is important because there is a new peak margin rule by SEBI, and as per that, you get your full 100% capital to trade again only on the next day. Say you sold a stock worth 1 lakh today, and generally you only get a capital of around 80,000 to trade again. You need to wait for a day to get your 20,000 back. So that's the reason we exit all the holdings simply around 320 or 325 on the last trading day and come out of all the holdings. And next day, when we want to enter into new list of 10 stocks, we will have all 100% capital because we are not selling on that particular day, right? We have already sold previous day. And so today we will get all our 100% capital back and we can safely reinvest in the new list of 10 stocks. That's the process we are going to follow as far as exiting and entering the stocks. Now, a small tool or a calculator that we have to make this process easy is PDR calculator. If you come to my blog and hit on my portfolio, you see a list of 10 stocks, right? What I do is on the last day of every month, around 9 p.m., I post a list of new 10 stocks that we can trade in next month, which is the next day. You see all 10 new stocks here around 9 p.m. What you have to do is scroll down a little more and you see something called PDR calculator. Just hit on this and it will take you to a Google spreadsheet where you have certain fields to input the data and certain fields which give you direct output. Let's see what this simple calculator is. First input that you have to enter is capital available. So once after you sell all the stocks on the last day, let's assume that today is October 31st and I sold all the stocks at 320 or 325. Now at 9 p.m. I come to 30 CAGR blog and I can see all 10 stocks that I can invest in tomorrow. So these are the new list of stocks. Now I come to this calculator and I have to enter capital available for me to trade tomorrow. From where I get this capital, I have to go to my broker's account. But one important point to note here is, as I said, after you sold your stock, on that particular day, you only get 80%. Some brokers credit all 100%, and some brokers credit only 80%. And next day, early morning, they credit 20% before market hours. Whatever is the case, ensure that you enter all 100% here. Okay, so first you need to know whether your broker is showing 80% or 100% at the time of doing this calculation. I'm assuming that you do this calculation around 9 o'clock or 9:30 after I post list of new stocks in my blog. So at that time, whether it is 80% or 100% that is showing in your broking account, you have to enter full 100% because that's the amount that you can trade with on the next day, right? And then the next is maximum stocks. Generally, this number doesn't change. As I said earlier, I'm trading in 10 stocks. So irrespective of number of stocks that I got from screeners this month, this number will always stay the same for my entire investment period. In this case, since I'm trading in 10 stocks, it will always be 10. But in case if you are trading only in 5 stocks for your entire trading period of 5 years, 10 years, or 20 years, make sure that you put 5 here. And once after you input these two cells, you get a direct output here. This is a simple division which says capital that we are going to trade in each stock. Since I entered 5,40,000 and 10 maximum stocks, 5,40,000 divided by 10 is 54,000. So this is the amount that we are going to invest in each stock tomorrow, assuming today is 31st of October. And I have clearly put this as output do not touch. So please don't touch the cells where you see this output. Even here also in this table, you can see output do not touch. Since these are formula driven cells, I request you not to touch these cells. All right, now we have entered two inputs, right? First is the capital, second is the maximum stocks. Now, the third is next month stocks. As I said, you can simply go to my blog and get all these 10 stocks and you can copy paste all those 10 stocks here. Fourth and the last input that we have to enter is LTP, which is nothing but last traded price, or CMP, which is current market price, is nothing but the closing price of these stocks on the last trading day. So you can either go to NSE website, your broker terminal, or any other website from where you can get the last traded price of these stocks. Make sure that you enter all these prices correctly here. And once after you enter next month stocks and the entry prices, which is nothing but the closing price of that particular day, then you get the quantity here and the capital required for each stock. Let's say in this case, stock V, the last traded price or the closing price of this stock is 220.6. And since we know that we have to invest 54,000 in each stock, 54,000 divided by 220, you get 244 stocks that you need to purchase next day. For 244 stocks, we need a capital of 53,826. And as you all know, we cannot exactly allocate 54,000 to any stock. There will be some balance left. In this case, as you see, 173 or 174 rupees is left, and we park all these balances aside. As you see, I have put something called balance, which is sum of all these individual balances. Though we have 5,40,000 rupees, we only trade using 5,37,000 odd, and we will keep this balance in our account. And remember, let's say your 5,37,000 has become 6 lakhs next month. Then, when you are redoing this calculation on the last day of next month, you have to enter this 6 lakhs plus the balance that's there in your account 2,600. So, the capital that you have to enter here on the last day of next month is 6 lakh 2,600 rupees. This capital is sum of the realized profits that you have got in that particular month plus any balance amount left in your trading account. All right, so we also have some notes here. I already explained about all these things except the last one. For some reason, if you're not able to do this exercise on last trading day, that is perfectly fine. You can also do this exercise on the next day as well, which means on first or even after markets opened. That's absolutely fine. All you have to do is just change the entry prices. Let's say you are doing this exercise at 11 o'clock on 1st of next month. In that case, instead of entering the close price of previous day, you know the latest price, right? So just make sure that you enter the current market price and then you get the quantity and immediately you can purchase in live market. The reason why we are doing all this one day before is prices move very fast during live markets, and at that time it would be a little difficult for us to perform this exercise. And that's the reason we are doing this one day before, keeping all these quantities ready. And next day when markets open, simply we will hit a button and then purchase all the stocks. And that is exactly why I will not enter values in these three columns on previous day. When you visit my blog at 9 o'clock on the last trading day, you only see first and second columns filled. That's because I know the stocks that I have to trade in the next day, but I do not know the prices where I'm going to buy. That I will get to know only once markets open and I do real trading. That's the reason I do not fill these three columns. Next day, when I enter into these 10 stocks, I get to know at what price I entered. Probably after market closing, I enter details of these three columns as well. So the key point that we need to remember here is, for calculation purpose, we take the closing prices of all these new stocks. However, when it comes to entering details in these three columns, we only will go with real prices at which we have traded. There may be a little bit of discrepancy between these two prices, but that is absolutely fine. And please remember, if you want to do all this calculation using this spreadsheet, then you have to first download a copy of it. You can do that by clicking on File, which is there at top left, and in that you find an option to download a copy. So just hover your mouse on to download option and hit on Microsoft Excel. This downloads a version of this calculator, and then you can use this in your local laptop or computer. And one other tip that will help you a lot in terms of execution is, after you do this exercise, you can also keep your stocks and quantity ready in your broking terminal. All you have to do is, next day after market opens at 9:15, just double click and then all your orders get executed. I'll show you how to do that. All you have to do is go to your broker terminal, and remember, this helps only for those who have account in Zerodha. I'm not really sure if this basket feature is available in other trading terminals as well, but in Zerodha it's definitely possible. So all you have to do is just create a basket of stocks here. I give name for this basket as new list of stocks, and you need to enter your list of stocks into this. Let's say Tech Mahindra, and it will ask you the quantity that you have to purchase. Let's say 128, and make sure that you purchase at market order. And remember, this is very important. When you are entering or exiting, we generally enter into stocks that have good volume. So I would suggest not to bargain for limit prices. Go ahead and select market price. So in this case, I entered Tech Mahindra 128 quantity long term, and then all you have to do is just hit on add. And if you want to add another stock, just type in fee and again quantity, let's say 56, and then add. Like that you can build a basket of stocks along with the quantity, and you also get to see the margin required here. And after the market opens the very next day, all you have to do is just execute. And in some brokers, they will not allow you to carry forward these stocks in the basket. So in those cases, all you have to do is enter this before market hours. Maybe at 8 o'clock or 8:30, you can build your basket and keep it ready. Once after the market starts, just hit on this execute, and you can purchase all these stocks in just a few seconds. Even if you don't have basket order feature, you can still make use of AMO, which most of the brokers allow. AMO is nothing but after market order, where you are allowed to place orders even before market opening. And even in Zerodha, you can use this basket feature with the regular orders or as aftermarket order. And talking about the SL, if you observe in this entire strategy, we haven't talked about SL. That's because we are already entering into high quality stocks, and stop loss is not really required for this. And the other thing is we are already diversifying this into 10 stocks, right? So even if you get a loss in one stock, in your overall portfolio, it would be negligible. But there are some experts who say that we should never invest or trade in stock markets without stop losses. So if you really want to have a stop loss, then you can probably go with 15% stop loss. I mean, as I said, I don't personally prefer having stop losses, but if you really want to have it, you can probably place 15% or 20% stop loss in each stock. And even if you want to have that kind of stop losses, we have an excellent option in Zerodha called GTT. Let me close this and show you. So if you go to orders, you see something called GTT, good till trigger. One advantage with this GTT is you don't need to place stop loss every day. Generally, if you place the stop loss for these 10 stocks, it get cancelled at the end of the day, and next day you again need to re-enter all 10 stop losses. Instead, if you use this GTT, your stop losses will get carry forwarded till the end of the month. And at the end of the month, when you are churning your portfolio, you can cancel this GTT stop losses and have a new set of stop losses in this GTT feature. So GTT and baskets, these two are some important features that we have in Zerodha terminal and come quite handy when you are trading with this PDR strategy. One question that people ask me time and again is, like other websites, why don't I keep this current capital constant? Say the current capital is 5 lakhs and every month I calculate profits and losses for that 5 lakhs. Next month also I again input all new 10 stocks and still allocate capital only for this 5 lakhs so that the calculation becomes easy. I started with a capital of 5 lakhs in September 2020, and every month I try to rebalance my portfolio as per the latest capital. The reason why I'm doing this is I want people to know how profitable this strategy is over a period of time. So I'm not maintaining a constant capital of 5 lakhs every month. You see that in most of the websites, they show their profits and losses for a fixed capital amount, right? But no, I'm not going to do that because every month I want to show you how we progress in terms of capital. And I want you also to do it in the same fashion. And as I said, maybe after a few years, after 2 or 3 years, my 5 lakhs might become 15 lakhs or 20 lakhs. And at that point in time, if you are seeing this video and you are just about to start your investment with even 1 lakh or 50,000, that is absolutely fine. All you have to do is just replicate the process that I showed in this video. You don't need to start with 5 lakhs. You don't need to start with 15 lakhs. This strategy is so very flexible that you can even start with 10,000 rupees. As I said, what's important is not the investment capital, but your trade discipline. So even if you have 10,000, invest 1,000 in each stock and you see that gradually you make decent profits in stock markets. Okay, now we are entering into another important topic called risk and money management. As I said earlier, this is really like a game changer or a deal breaker for any strategy. I see many people fail in most successful strategies as well just because they do not know how to manage their portfolio in terms of money and risk. So, risk management is one important piece in stock market. If you ask me, this is the most important even than the strategy itself. Let's go ahead and see what are some of the key risk and money management concepts that we have as part of this PDR strategy. First in this is position sizing. What is the size of each of your position with respect to your portfolio? And remember, to me, position sizing is not just the size of your position, but also the size of the risk that you take for each stock. And what we are doing in this case is we are investing in 5 lakhs and dividing this into 10 stocks, right? So each stock has only 50,000. Now imagine a case where we are investing all these 5 lakhs in just one single stock. And what happens is if this stock falls by 20%, then your investment of 5 lakhs becomes 4 lakhs, right? However, let's say we divided this into 10 stocks, and even this stock is down by 20% now. But since we invested only 50,000 in this, if you take 20% of 50,000, it is just 10,000 rupees that we are going to lose. So you will still have 40,000 invested in this stock plus entire 4.5 lakhs that we invested in all other stocks. So in total, we still have 4.9 lakhs in our portfolio. Now compare this 4 lakhs against this 4 lakh 90,000. So this is the power of position sizing. The amount of risk that you take as part of your portfolio comes down drastically. It's the same 20% down in both the cases, whereas in the second case, we are only losing 10,000 or 2% of our overall portfolio. So this is really a comparison between two portfolios where one loses 20% and the other loses only 2%. It's important for you to understand into how many stocks we are diversifying our portfolio and how much amount we are investing in each and every stock. That's where this entire risk and money management comes into picture. And remember, falling 20% in 1 month is highly unlikely. But even if you go with 20%, we are only losing 2% of our entire portfolio, right? But in real cases, you might say some stocks are down by 5%, 10%, 15%, like that. But even after all that kind of churning, you still end up in profits if you keep doing this over and over. And other thing about money management is if you want to really enjoy this advantage of compounding, then you need to reinvest your capital. You can't really take out the profits every month and keep investing the same amount. Of course, different types of trading styles or investing styles have different advantages, but as I said, if you really want to grow your capital over a period of time, then you need to reinvest all the profits that you gained in the previous month. That's really the secret of how you build wealth using this compounding method. And finally, before we talk about advantages, some people might ask me, what if I want to withdraw some amount, or what if I want to add some money to the portfolio, and all those sorts of questions. So what I would say is, if you want to add money, please go ahead and do it, but have a plan in place. You need to systematically add money as well. Maybe you can add constant X amount every month or every year. Or even if you want to withdraw, maybe you don't withdraw all the profits that you get. You withdraw maybe 5% or 10% of what you have gained in last year. And again, it's a best practice to withdraw your funds at least after 1 year. Don't do it so very frequently that you keep taking out profits every month. I wouldn't suggest that. Trade for entire year, and then probably you can take some percentage of profits that you have earned in the previous year. So that's a good way to take out profits from stock markets. Anyway, now we have reached to the last part of this entire strategy. What are some of the advantages of this PDR strategy? First is time investment. As I said, you absolutely need just 1 hour every month to spend, and you can build a huge, huge wealth in the long run. Yeah, that's my second point. You get a very high returns over long run, 30%. And as I said, in some cases, you even get 50, 60%. And to be honest, you might see more than 30% returns as well if you trade this strategy with discipline and patience. And the next is absolutely no stress. You might have heard many people lost money in stock markets because they mostly do some kind of intraday trading. If you do not have a proper strategy in place, you might have to undergo a lot of stress. And trust me, if you have stress, it doesn't matter whatever amount you earn in stock market, you are going to make irreversible damage to your health. And the next is less drawdown. So as I said, you might have around 20 or 25% of drawdown, which I think is fine, because if you are not ready for drawdowns, then ideally you shouldn't be investing in stock markets. Any investor or trader in the world must have experience to drawdowns. Without drawdowns, you can't get profits. And in this strategy, especially, I think we have reasonable amount of drawdowns, and that helps us to get back into the game anytime. And we enter only into very high quality stocks based on those three factors that I mentioned. One is fundamentals, second is technicals, and third is stock valuation. So Since we only enter into quality stocks, the amount of losses might also be limited. And of course, there are many other advantages as well, like the taxes that you pay. If you trade in options or futures, the amount of tax that you need to pay is around 30%. However, if you trade this way, then you might just have to pay around 15% short-term capital gain tax. So if you're really trading with 1 crore, you end up paying 30 lakhs as the tax to government if you trade in futures or options. However, in this method, you only have to pay 15 lakhs. So straight away you are saving 15 lakhs, which can be counted as your profits, right? End of the day, if you are not taking them out as expenses or taxes, obviously you can count them as profits. So you are straight away saving 15 lakhs, which is nothing but 15% extra profits. As I said, there are many other advantages as well as part of this strategy. And one other thing that I would like to tell you is, if you wish to start and continue your trading journey with me, I would suggest you to open a trading and demat account using my referral link. That's because I have some future plans where I would like to build a bot that takes care of this entire process. You don't really need to enter your data into calculator and then place your orders in terminal on the next trading day. The bot would automatically take care of all these things. And if you wish to avail that, then you will have to open a trading account with me. And apart from that, I also have another strategy that gives some stocks randomly, which might jump 20 to 30% in the next, 1, 2, or 3 months. And I call them as booster calls. So I might give you that as well in case if you open your trading and demat account with me. So you can open in Zerodha, Upstocks, LS Blue, Fires, or Angel Broking. You can pick one of these 5 broking services. And remember, all these are discounted brokers, which means you don't have to pay any brokerage for your equity investments in all these broking houses. And the advantage of opening using my referral link is you get access to all these trading tools and interesting strategies in future for absolutely free of cost. So if you would like to open an account, then WhatsApp me or mail me at support@30cagr.com. You can have my WhatsApp number in the description. Please go and refer to that section. And finally, if you want to get in touch with me, you can use any of these social handles or message me on this WhatsApp number. And once again, please don't forget to subscribe to this channel because that's the only way you get to know all interesting strategies in future. And also don't forget to hit on bell icon. Thank you and see you in the next video.